All right, today I'm gonna be giving you guys a full course on Forex for beginners for 2025. I've been trading for the last 3 years and it's changing my life. I wanna be able to provide value for the people that were in my shoes trying to figure this thing out, but realizing that it's too complicated. Today, I wanna be your interpreter and make things super duper simple. I promise you, out of all the videos I've seen, this is gonna be the most simplest way to understand Forex, futures, trading, anything in general. I'm gonna give you the basics and a bonus strategy to be able to help you start making money today. Without further ado, let's hit the charts. All right, so these are candles. So what you need to know when you zoom in, this red candle means that price is going down. This green candle means price is going up. It's literally that simple. If you see a red candle, it is going down. If you see a green candle, it's going up. Some people call this bullish. Some people call this bearish. All you need to know is green candle up, red candle down. It's literally that simple. All right, so as we zoom out, if you see, you have consecutive candles going down. You got some green pushing up, consecutive going down, some green pushing up. That's called a downtrend. And so the way that we mark it is literally we identify the trend. If you do it like this, that means price is going down. That's literally, it's that simple. So we would call that a bearish trend, right? And so if you do the opposite, right? This right here, this means that price is going up. If you see bigger pushes like this and little pushes going down, bigger pushes like that, that is a bullish trend. That means price is going up. It's an uptrend. So literally it'll look just like this. That's it. It's that simple. And so what we're gonna do, we're gonna identify highs and lows, right? So one of the most important things that you have to identify in the market when you're learning how to trade is what is a high and what is a low. So if you see that price at the top right here, so say we got in the market and we're right here with it, right? That means that this is the high. It has to break structure. We'll go into that in a minute, but that means like this is the low. And so what happens is price is making a new low. Price is making a new high. It's the highest point of the market. And so if this is the highest point and this is the lowest point, say we came in right here, if this is the highest point and this is the lowest point, that means this right here will be the new high. I'm gonna ask you guys, what's the next lowest point? I'm gonna give you 3 seconds. What's the next lowest point? If this is the high and this is the low, what's the next lowest point? All right, I hope you got it right. It's this one right here. All right, so what's the next highest point? So it's after price broke this structure, which means it broke this line right here. So if it broke this line, what's the next highest point? All right, I hope you're getting it right. If not, you need to rewind the video and start over. All right, here we go. What's the next lowest point? If price broke down and broke the structure, what would be the next lowest point? I hope you got it right. Okay, good job. What's the next highest point? If it broke and came up like this will be the next highest point. Let's do one more. What's the next lowest point? Hope you got that right. And then the next high. Boom. Okay, and then price, this is current price, starting to change character. We'll go to that in a minute. All right, let's do it over here. What's the lowest point? Boom. I feel like Dora the Explorer. All right. What's the highest point? Boom, right here. What's the next lowest point? Boom. What's the next highest point? Boom. What's the next low? See, this one's a little complicated, but what's the lowest point? I'll zoom in for you. What's the next lowest point? So you got this one, or this one. Which one you picking? It's this one right here. That's the lowest point. All right, next highest point. Hope you got it right. Boom. Because remember, price, if this was the lowest point, it has to break this line right here. And so what you can do to be able to start off is just go in the market and just identify the highs and lows. Identify the trend and then identify the highs and lows. All right, so the next thing is trend line. So you want to be able to identify the trend. So you literally can look at the market right now, and say, okay, price is going up. Just by looking at it, you can be able to say, okay, price is going up. If we go over here, you can literally look at the market right here and say, okay, price is going down. So literally in a market condition is what we call it, like this, you would only take sales because price is going down. You wouldn't take buys, you would only take sales. And for the same right here, price is going up. you would only take buys if the price is going up. You would only take buys. Do not take sales if price is going up. Do not take buys if price is going down. Simple as that. So if we're looking at the trend, we see, okay, price is going down like this. That means that we only take sales. Price is going down right here. We're only taking sales. You do the same for right here. Price is only going up. So we only take buys. Price is only going up. So we're only taking buys. It's literally that simple. That is trend lines. Next thing we're gonna look at is support and resistance. So if we draw a line, right, this one is most important. You guys can see right here, this is called resistance. So price literally in this mode right here is not trying to break through it. And so it's struggling to break through it. But what happens is price actually ends up breaking through. And so it took a lot of times for price to break through this line. It's like it's knocking at the door. And what ends up happening is it comes to the door, it drops all the way down so it can be able to get momentum to come through that door and bust through. And then sometimes it got things to step over, woo, 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 and it busts through again. And then it's like, all right, let's get a little bit more momentum, bust through. So that's literally what resistance looks like. And then this one is a little bit complicated, but this is what support would look like. So support is literally, I'm trying to bounce off of this. Think of Flappy Bird. Y'all remember Flappy Bird? So think of like, I'm trying to bounce off of this so I can keep going up. I'm just trying to bounce so I can keep going up. So as you guys can see, we got a touch right here. We got a touch right here. It fell through a little bit, but it came back up. Try to touch. We got one last touch, and then it just shot up. So that's literally support and resistance. It's that simple. Do not overcomplicate it. It's literally just a barrier that price can't go through. Literally keep it that simple. All right, here's where we get into a little bit advanced territory, right? So if you see price is pushing up this strong like this, we call that a demand zone. And so literally demand is where price super duper pushes up, and then it comes down, and then you have supply zones where price super duper pushes down, and then, you know what I'm saying, it go. So that's a little bit advanced, but I just need you to understand that a big old giant push, we call that supply, and then when it's a big old giant push, it's a demand. I may be saying it backwards. All I know is big push supply, big push demand, whatever gives me the money. Next thing you need to know is fair value gaps. One thing about fair value gaps is it's always going to come back to it. So if price leaves a fair value gap, right, price will always come back to it. As you guys can see right here, always comes back to it and pushes off. And so literally fair value gaps is what got me profitable. And fair value gap is when price is moving so fast that it leaves what they call an imbalance. So if you guys can see all the other candles, right, they're all touching each other. So from wick to body, they're all touching each other. They're all touching, except for this one right here. But as you guys can see, price came back to that and ran right through it. Whenever there's a fair value gap in the market, whenever there's a gap in the market, price has to come back to it. That is the rule of trading. It has to come back. And so price, it left a fair value gap, and then it came back, got some of the money that was in here, and then pushed off of it. Literally same thing right here. Price for fair value gap, a big old fair value gap. There's no way you're gonna have a big old fair value gap like this. Like you're pushing down that much and you're leaving that much money behind. It's like you're running and then money falls out of your pocket as you're running. And then it's like, okay, oh shoot, I gotta go back. I gotta get my money back. And then you grab your money and then you continue in the direction. That's literally how fair value gaps work. Don't overcomplicate it. It's literally where price just has to come back to it. And then order blocks are literally the same thing. Order blocks is what starts the big move. So if you have a big push, supply, demand push, order blocks is the first candle that started. So some people, they'll do opposite color candles or they'll do the same color candles that push off. For me, it don't matter. If it's a big push and it's the candle that started to move, I know that most likely price is going to come back to it. So as you guys can even see right here, so this will be the order block candle, right? What it did was it had a fair value gap left right after it, and price came into that gap and literally pushed off. Like if you entered this right here, you would have made thousands of dollars. Like it's literally that simple. So in my course, I explain all of this stuff in deep detail. It's very beginner friendly, and literally you can get it now. That's all. That's the only plug I'm gonna do. That's the only plug I'm gonna do. But that's literally what a fair value gap and order block is. That's part of smart money concepts. When you trade with the banks, it's just very helpful to understand, like, this is what you do. And so I would even say, if you entered off of this right here and you put your stop loss below the fair value gap and you took it all the way to the top, you would have caught almost a 1 to 10, which means if you risked $100, you would make $1,000. If you risked $1,000, you would make $10,000. That's how crazy the markets get, bro. Like, you can make crazy money off of this stuff. So that's all I'm gonna give you guys today. If you guys feel like I can go in deep detail in some of this stuff and get free value, let me know in the comments. Go ahead and hit the subscribe button, leave a like, leave a comment. Let me know how I can be a blessing to you guys, and y'all be good. Peace.